So I'll just introduce our three strategists to begin with. Their shining faces are right here in front of me. Firstly, we have Charu Chanana. Charu is our market strategist based here in Singapore. She's over 12 years experience in the finance industry across equity and macroeconomic space, covering both the global and Asian markets. At Saxo, she focuses on delivering investment strategies based on those macroeconomic plays and monetary policy developments. Previously, Charu was a lead economist at Continuum, and I know that emerging markets are quite close to her heart, so she'll definitely touch on that a little bit later. We have Redmond, who's just flown in this afternoon, looking bright-eyed and button-faced down in the front there. Thank you, Redmond, for making that flight. We appreciate that. I just can't believe that she's had a 30-year career, and yet you're so still young and handsome. I don't know how you do that, Redmond, but he does. Across private equity, hedge fund space, investment management, institutional sales and proprietary trading. He was also working as a senior portfolio manager at BNP Paribas, another French organisation in Hong Kong, where he sat on the bank's Global Investment Committee. He did some pretty important stuff, including being a voting member when they were setting up those investment strategies. So we're really glad to have you here at Redmond. We appreciate that. And lastly, joining me from down under, the energetic person in the front here, Jessica Amir. Hands up there. Thank you, Jessica. We appreciate that. Jessica's had over 14 years of experience in financial markets. Prior to seeing the light and joining Saxo, she was actually with Bell Financial Group, and they're a listed stockbroker down under on the ASX. If you flick on the news, you're bound to see Jessica there, both through Australia and Asia Pac. She's also been quite privileged, being a TV presenter and journalist in the past, having interviewed some former prime ministers and treasurers and captains of industry. So she comes well credentialed. So they're our three strategists. They'll guide you through the next 15 minutes or so of conversation. But with that, I'd like to welcome Charu to the stage. Thank you, Charu.
Thank you, David, for that very kind introduction. Good evening, everyone, and a very, very warm welcome. So nice to see these happy, smiling faces with masks off finally in Singapore. And thank you so much for making it to our event today. If you go back now to your pigeonhole, you could probably see a question on emerging markets. And we do have some interesting responses there. China optimism, I think that's coming from Steen and coming from Albert. Right, okay, great. And we also have some amount of optimism in Vietnam, which is great because I certainly do share that as well. Okay. Awesome, keep going. Okay, I don't know why a lot of people don't like Malaysia here. And there's still about 5% people who don't want to touch emerging markets, okay? I hope I can turn those 5%, okay, 4%, 5% back over to find some interesting opportunities in emerging markets today. Okay, thank you. Thank you all for participating in that poll. And I'm going to dive straight in. We've had a pretty great overview from Steen, from Albert, and we're pretty aware of the kind of macro headwinds that are coming out for us. What do those headwinds mean? They certainly mean that investors flock to safer assets. They flock away from emerging markets, which are considered risky assets. And a lot of those issues that we are facing now, some are cyclical. Of course, there are issues like the Fed raising rates. We have inflation, which I don't think Steen will allow me to call it cyclical anymore. We have a strong dollar. We have China slowing down for the time being. So all of those issues certainly weigh on the minds of investors. But what I would focus here more are the structural issues, and that's what we've already talked about a little bit. We are hitting a limit in the supply of physical goods. That means supply is going to keep running short, and that is extremely important for emerging markets. While Steen doesn't believe in the concept of aggregate demand anymore, it is extremely relevant for emerging markets because they derive most of their growth from demand. If aggregate demand continues to run as strongly as it does in emerging markets, supply keeps falling short, We all know where that heads to. And that exactly is something that we have already been witnessing. Emerging markets are reeling under pressure. A lot of countries have seen their currencies decline to record lows. A lot of them have had to use their forex reserves to kind of counter that effect in the currency space. We have seen a huge amount of outflows from the equity and the bond markets in the emerging markets for the last few months. That seems to be deaccelerating, but I would say it still goes on. Now, at this point, again, I'll pause and give it a think about when things are looking bad. Why do I stand here and talk about the opportunities in emerging markets? Well, it's something, again, that Albert alluded to, and I would like to highlight here. With emerging markets being 28% of the global GDP, and likely to go higher from here, the GDP growth rate for emerging markets is outpacing the growth rates we're seeing in the developed world. So that 28%, we certainly know is going to go higher from here. But only 3% of an average portfolio is invested in emerging markets equity. Well, that clearly shows how underinvested this asset class is. While the fragmentation in emerging markets does make me believe that it probably is not a great idea now to just have an ETF tracking emerging markets in my portfolio and call it, oh wow, I'm positioned for these long-term gains in emerging markets. The demographic story is great. The urbanization story is great. They have a growing middle class, so I'm going to get some great returns in the long run. I think we need to get a little bit more active here, and that's what I would encourage you to do. I have these 3 ideas for you to consider. The bright one on the right, the rising sun, is indicating India, which of course, yes, a great demographic story, a great digitization story, a growing manufacturing base, but also getting a lot of advantage from a lot of hedge funds moving out of China. And that obviously makes India the most interesting alternate choice of investment. The one on the left, that is the buzzing city of Jakarta. Indonesia is, of course, something I didn't see ranking too well in our survey earlier. It also has a very similar story to India regarding the demographics, regarding the growing middle class, but the added advantage there is their resources. Indonesia has been running record trade surpluses over the last few months because of their exports of coal. I'm sure my colleague is going to get to that later, some insights there on coal as well. But besides that, Indonesia also has great reserves of lithium and nickel, which are extremely critical for the green transformation story. And lastly, the one in the center, a little bit of a dark image there. It's from Vietnam, but it does show that we have a hidden gem here in Asia. I love that place. It's buzzing with activity. It has capitalized really well because of the supply chains that moved out of China. And it is now the new factory of the world and the manufacturing FDI magnet of the world. So ladies and gentlemen, I would encourage you to consider dedicating a part of your portfolio to emerging markets. Thank you.